Many of us can't afford to buy a car with cash or credit card, which is why there's financing options available. But is financing through your bank, a broker, or car dealership a better option? Alan, can you tell me what are the pros and cons of financing through a broker or the bank?
Yes, so financing through a broker or the bank, I guess one of the main factors most people consider is the relationship aspect of it, because a lot of people that's in business, they will have a relationship with a business relationship manager at the bank or a relationship with the broker. What that relationship means that they can get access such as a line of credit quite easily, and the benefit of a line of credit is you can spend on whatever you like.
Whatever you like.
So
they're like, yes, have some more money.
Yeah, so once it's approved, there's no real other hurdles to getting it, so you can make decisions quite quickly. So that's probably the biggest benefit of going through a bank or a broker.
What's the downfall though?
I guess the downfall is, I guess the next question is, what's the benefit of going through a car business? So most people don't know, but dealerships actually finance about 50% of all their customers.
Wow.
So most customers do end up choosing to finance their vehicles through the dealership. The reason for that is there's a few inherent benefits. One is a lot of the car dealerships, their finance are through the car brand's own financier. So what that means is the car brand's own financier's main goal is to sell car, not to make money on finance.
Okay.
So what that means is there's obviously good value there sometimes. Sometimes the value is better than bank. There's especially what they call subvented finance rates. So for Audi, for example, Audi is considering a 1.99% finance rate on their large SUVs.
Wow.
So that's something you can't get from a
bank or a broker.
Yeah, correct. The other benefit is ease of, I guess, application. You already have the dealership, you already met the team, you already probably met the business manager. So they
want you to have that car.
They do whatever they want to get you financed. So
let me make you a coffee while you wait.
Oh yeah, more than a coffee. I'll make a coffee actually. So there's that aspect of everyone's busy, so you don't want to then go to the bank and go through the whole interview process again, find out what car it is, and sometimes financing is about finding out what car you purchase, because every little aspect of the car and the options it's got can actually affect the net repayment you pay at the end.
Yes.
So you want to make sure that they get it right. Obviously, dealers will get that right because it sells you the car. A third aspect of that would be a new program called Guaranteed Future Value, which we have through Audi. So basically what that is historically what happened was you bought a car, you financed a car, and you had to choose a balloon of X amount. But what might happen is at the end of the term, your car is worth less than that balloon you've chosen, so that final lump sum payout.
Yeah.
So what that means is you're in negative equity, which means you owe more money than your car's worth, which is a position you don't want anyone to be in. So guaranteed future value takes away that risk. What that is that at the end of the term, even if the value of your car is worth less than the agreed guaranteed minimum value, you have no risk because the risk is taken up by the financier. So you can, if your car's worth less than what your payout is at the end, you can just simply give the key back to your dealership and we'll take the car back. There's no more payments to you, no more debt to you. So that's a very, a very customer focused product where the banks can't offer. It's only available through a car dealership.
It's really interesting. So what should you look out for then when you're financing a car?
So again, the most important thing is comparing apples with apples, because a lot of time people get stuck on what's the rate, what's the percentage. Yes, the rate is important, but the rate is not the final figure. The final figure is important, but the final figure can be made up depending on how you structure the loan. So what I mean by that is you might be having bought a car for $40,000, but one repayment you get quoted is say $200 a week. Another one might be $150 a week. So common sense would be saying, I'll go for the $150 week loan, but that's actually not right, because the $150 week loan might be over a 7-year term, whereas the $200 a week loan is over a 4-year term, and which means that you're paying at the life of the loan a lot less. Again, the $200 loan might only have a 10% balloon or final payout, whereas the $150 loan might have a 30% final payout. So those factors all come into play. So the first thing is compare apple to apple. I can't emphasize that enough. So you have to look at what's the net amount borrowed, what's the balloon or payout at the end, and what's the term. If all those three elements are the same, then it's about the net repayment amount. And that's when you start comparing apple to apple. The other aspect of rate is why rate is misleading is because for rate, for example, you might have a one bank quoting 4% and then the dealership's at 6%, but the bank might have hidden fees and charges on top of that, which means when you look at comparison rate, the bank rate might be 6.5 versus the 6% at the dealership where there's no other monthly account keeping fees. So it's all the small things that I guess I have to look into. So,
yeah, absolutely, and working out what the final cost will be.
Yeah, but definitely try to compare apples with apples. That's don't get stuck on the rate or the repayment. Look at how it's structured as a whole.
Yes.
And then look at if it's all equal, then obviously the one with the lower rate, lower payment is the right one. So.
Because how hard is it to get approved for a loan through the car dealership?
So not hard. But it does depend on your personal profile. So whether you get approved for a loan, how hard is it through a bank or how hard through a car dealership, it's all the same. It's based on you as a person. So what I mean by that is obviously if you have a bad history of repayments, because now the finance industry is so well regulated, there's data everywhere. So if you missed a phone bill payment, that's recording your personal credit file. Now, the more missed payment you have, obviously, the longer it takes to get a loan approved because the bank will ask for more. But if you're perfect, paid off everything, have a perfect credit history, then you can approve on the day.
Wow.
Or can even settle on the day, really, if all apples align. So how long it takes really depends on you and how you manage your own finances. Yeah.
There you have it. So if you're looking for your first car or the car of your dreams, Cairns Cars has new and used vehicles from $10,000 to $400,000 to suit your lifestyle and of course budget. And they're the experts in helping you finance a loan and pay for it as well for a car. So go and see Alan and his friendly team today. They love helping families find the car they're looking for.